Your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes and get ready to start your day, folks. Quick few housekeeping rules though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, everyone. Welcome back to Wealth Coffee Chats. A happy Monday to you all. Hopefully you had a nice relaxing weekend and are ready to tackle the week ahead. I know I did. I had a pretty relaxing weekend, although I do think I set a record for the most washing folded ever over a 48-hour period. So where's everyone joining me from today? Jump into the chat and say hello. I'm in the beautiful Mildura up on the Murray River, and it's looking like a pretty good day out there. A few clouds around, but I think it'll still be pretty high 20, so it's going to be a beautiful day. So my name is Bob Proven, and I'm one of the property advisors here at Positive Real Estate. So today, I wanted to start your week off with a bit of a bang and share a really powerful story about a young couple that I've been working with. And for the sake of today, we're going to call them Dave and Jess. So Dave and Jess, they're both very, very hardworking Aussies in their early 30s, earning solid incomes and paying taxes just like everybody else. But they were feeling like they weren't really getting ahead in life at all. So, who here can relate to that? Who feels like, they're not getting ahead at all? They're just sort of struggling along, not much going on in life. It's just sort of a bit of a battle. Well, over the last 12 months, Dave and Jess have completely changed their story through a few smart property moves and by, claiming what they were legally entitled to. Not only have they saved thousands in tax, but they've built $250,000 worth of new wealth. So today I'm going to walk you through exactly what they did, the numbers behind it, and how you can take the same approach into your own situation. And it all started by simply asking for help. So where did they start? When I first met Dave and Jess, they were, in a really common position. Dave was earning around $111,000 a year. Jess was earning around $97,000 a year. So together, they had a really strong household income. Now, they already had one investment property, which was worth around $620,000 that they'd sourced on their own. But like many people, they weren't sure if they should buy another one or if they even could. So that was when they contacted us here at Positive Real Estate, and they had questions like, can we afford it? Will this affect our lifestyle? What if interest rates rise? Probably the biggest one, the biggest question is it even worth it, or should we just pay off what we have? Now, those are all completely fair questions. So instead of rushing in, we built a nice, clear plan for them. So the plan was simple. We looked at their current cash flow. Our brokers were able to find that they had the capacity to purchase a second investment property, but it did need to be done pretty smartly. So we helped them buy a property for $432,000 that was off market in a really high growth location. Okay, and we structured that loan correctly from day one. We connected them with a professional property manager, kept everything really well documented, and importantly, we got a depreciation report done on both of those investment properties that they had, because they hadn't done a depreciation report on that first one. They weren't aware of what that was. Now, this is where things get pretty exciting. So they claimed all the legitimate tax deductions that they could, including interest on their investment loans, property management fees, council and water rates, insurance, maintenance, and all the other property costs, and of course, the depreciation, which is one of the most overlooked deductions when it comes to investing, and they actually had overlooked it to begin with. So when you combine all of that, it can make a huge difference to your taxable income and their taxable income. So what were the results? Let's talk some numbers. So they engaged our accountants here, PosTax, and over the last financial year, Dave's income was $111,610. Now, after applying all the deductions, his taxable income dropped down to $89,456. Now, his tax rate actually dropped from 30% to 22%. So he's paying 8 cents less per dollar he earns. And he also ended up receiving a tax return of $6,935 compared to just $4,411 the year before, which is pretty powerful. Now, this one's even better. Okay, so Jess's income was $97,359. Her taxable income dropped down to $74,211, which brought her tax rate down from 30% to 23%. So she was paying 7 cents less per dollar that she earned. Now, her tax return jumped from $247 last year. That's right, she only got $247 back in tax, to this year over $7,000. Okay, so together they received a joint tax return of $13,951 compared to around $4,600 the year before. So that's an extra $9,300 in cash straight back into their pocket, or because they're savvy investors, they've popped that into an offset account and they're saving themselves money on the interest repayments. Now, here's where it gets even better. Both of those investment properties that they had grew substantially in value over that 12 months. So the first property that they had increased from $620,000 to $720,000. So that's $100,000 in capital. The second property jumped from $432,000 to $580,000. So that's another $148,000 in growth. So between the tax savings and capital growth, they created around $257,000 in additional wealth in just 12 months, which is crazy. So now, let's think, what if they did nothing? Let's play the what if they did nothing scenario, because this is the part that most people actually don't think about. If they hadn't taken action, they would have continued paying about $53,000 a year in tax, and with no new deductions and no new growth. The first property would have still gone up, but that second property wouldn't even exist in their portfolio, and they'd have a lot of lazy money, which is equity, just sitting there doing absolutely nothing and not helping them with their future at all. So instead of being $257,000 wealthier, they'd just be another year older, another year of tax paid, and nothing else would have changed. So that's the cost of inaction. So what can we learn from Dave and Jess's story? Here's a few key takeaways. Lesson number 1, don't be afraid of change. Use the system to your advantage. Right? So Australia's tax system rewards investors who build assets that provide housing and stimulate the economy. If you structure things right, the system can actually work for you, not against you. Dave and Jess had an accountant that they'd known, they'd used, and they'd trusted for many, many years, but they outgrew that accountant and they needed one that specializes in property. So thanks to the 6-star team here, we were able to connect them with an amazing accountant who took them from a $247 tax return to $7,000 the next, along with $250,000 in equity. Lesson number 2, you don't have to be rich to start, but you do need a plan. So Dave and Jess are not multimillionaires. They're just normal people who took advice, who took action and stuck to the plan. Okay. One of the most important things that Dave and Jess reflect on when they look back at what they've achieved over the last 12 months is the importance of seeking an advisor to connect them with experts and to put all the pieces together with them. Lesson number 3, the biggest risk is doing nothing. The market doesn't wait for anyone. Okay, so every year you delay is another year of missed opportunity, missed growth, missed deductions, and missed potential. So to wrap all of that up, in just 12 months, Dave and Jess have saved thousands in tax. They've lowered their effective tax rates moving forward, built almost $250,000 in equity, and put themselves in a position to leverage again for the next property. That's the power of having a strategy, okay, and having that right support behind you. So that's what we do here, okay? We help people build portfolios. We not only create wealth, but we do it in a way that's tax efficient, structured, and sustainable. So if you're wondering, could this work for me? The answer is probably, yeah. But it starts with asking for help, then finding the right plan. Because if Dave and Jess can do it, earning average Aussie incomes, then so can you. So thanks for joining in today. Really appreciate it. Hope you've enjoyed that. Hope Dave and Jess have inspired you to continue on your property journey, or reach out to your coach, or even just make sure that you've got the right team around you, supporting you and helping you get to that desired result. Have a lovely Monday, everybody. We'll see you soon.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-star team here at positivementor.com.au.